Let's shift focus to some corporate action now. We have JK Tyres, which is in focus today. It goes stock split, but let's talk about the company's business outlook. That one's buzzing quite a bit in today's trading session. We have Mr. RAGHUPATI Singhania, the CMD of JK Tyres and Industries, joining in. Hi, Mr. Singhania. Thanks very much for joining in. Let me begin by asking you about the impact of falling crude prices on tyre companies. What impact has it had on your company?
You see, one has to watch. These prices have been varying. I mean, of course, in the last week or so, there's been particularly more downtrend. But we have to see where do they stabilize. That is number one. Number 2 point is that we should not forget that on just a quick fall or a quick change, you cannot immediately react on the impact, because ultimately there are other cost factors as well. The power costs are going up, the wages and salaries are going up, the electricity rates, as I said, power is going up, and a whole lot of other overheads are going up. So it is not a very simple mathematics to be able to straight away correlate. Yes, we could assess somewhat after the prices stabilize for a while, then we could certainly assess. But one thing I can say that it will certainly help the industry, which is fraught with, on the other hand, with the poor demand at the moment, because auto industry is quite stagnant and we don't see any rising demands yet. So therefore, to compensate that to an extent, the lower input costs should certainly help.
All right. Sir, what about the fall in crude prices? Do you think that's going to impact the margins, or do you think you are also in an industry where it has to be passed through because of competition?
No, you see, it is like this. It's not a pass-through straight, number one, because please appreciate that the oil is an input, or petro goods is input into our raw materials. So until unless the raw material prices move downwards based on the petro goods and the oil prices coming down, there's very little we can do, or we can even not fathom what ought we be doing really. So we'll have to wait and watch the trend, and also wait and watch how the prices behave for the other inputs. And then we can certainly take a view and perhaps respond to this more logically.
Okay, well, let's shift focus away now, Mr. Singhania, from the crude price impact and talk about what the capacity expansion plans for the company are going ahead.
As you might know that we just put up a green side plant 2 years back in Chennai, all radial plant, at an investment of 1100 crores. And we have, in last October, we already taken a view, our board has taken a decision to go ahead and expand that plant further by putting another 1400 crores. And we are investing primarily in truck and bus radial tires, and to an extent in car radial tires. So we are gearing up ourselves with a turnaround in the market. That's on one hand, of course, and likewise the industry is also trying to catch up. But the important thing is the demand must move, otherwise these capacities can become a problem. Of course, I am very optimistic in the sense that over the next year or so, demands should move, things should happen. There should be a little more incentive in the consumer financing, which is a huge psychological factor, if not material factor. It is a huge psychological factor in boosting demand. And if those things do happen, then certainly the demand should pick up, and therefore the capacity numbers should go up and the output should go up and should augur well for the industry.
Fair enough, sir. But how are you going to capitalize the ongoing capacity expansion plans?
You see, we have already finalized the financing of this project. We have done some preferential issues a few months back, and thereby bringing in equity. We have internal generations, and part of it is debt. That's how we are financing this project.
Okay, what is the demand situation among various car makers and also commercial vehicle segment?
You see, at the moment there is a bit of a lull all around, as you are aware. But hopefully, in the commercial vehicle sector, we should see some improvement with some economic activity improving, and also some mining operations being licensed to operate again, and so on. So that should help a little bit. car industry is very low at the moment, and I can't see too much of a boost coming in certainly until and unless there's better consumer sentiment there. The two-wheelers, of course, are booming. The tractor industry is in a bit of a slowdown, and I think it will not be before the first quarter of next year, 2015, or thereabouts, April and around then, that demand should revive a little bit. And so this is what we are seeing. But in all these areas, we are very well placed in terms of our availability of capacity and products. So whatever happens, I think we are there to grab the opportunity.
Okay, fair enough. Sir, the company has been reporting strong margins. So do you think that there is more room for improvement considering the subdued demand environment that you just spoke about?
We are working and pursuing those initiatives that we took earlier, which you commented upon. And we are pursuing with those initiatives, and it should certainly help us move a little forward. Of course, these margins are also so much dependent on what is going around in the terms of the market demand, in pricing of the raw material, and the capacity utilizations which going forward would be available or possible for us to attain. So yes, I'm optimistic about a little more positive working in the coming years.
Well, you know, tire companies have got a great boost from the way rubber prices have fallen, but do you get a sense that these have bottomed out and there won't be any incremental benefit, or do you see further fall in rubber prices?
I think rubber prices have fairly hit the bottom. I can't see them going down. I mean, and they are fairly low at the moment, and this is a question of the global phenomena which is hitting the prices. You know, China is a big factor apart from the production. And so I don't see it going down any further, but it will not be very much higher immediately. And I think in a quarter or two it might start moving a little bit, notwithstanding the seasonality factor.
Okay. Sir, are you planning to coming out with an IPO for JK Fenner?
No, we are not planning any IPO at the moment. It is an unlisted company, and we propose to maintain it that way as of now. And of course, we'll see when the future comes. But we are growing that business, and we have just expanded some capacities last year, and now we have to stabilize again because of the market demand to stabilize, and so accordingly we'll move forward in that business.
Okay, so where do you think the next triggers will come for your company? In the sense, will it be focusing on building capacity or bringing price uptakes or catering to new segments? What's going to be the next trigger?
In fact, it's a very good point. It's a combination of many factors. One, of course, is the volume. As I just said, that we are expanding our capacity, and that volume will be on the ground by April next year, 2015. That should help. Number two, the new products that we are launching continuously. Even in this year, 2014 calendar year, we launched 11 new products, both in car tires and as also in truck. And when I say new products, it means technologically more advanced, better performing products, more cost effective. So in fact, that is second. And third, of course, and not the least, is the thrust in the marketplace, changing our product mix. In fact, I might share with you that with this expansion that is coming in through, we would have become about 65% radial and 35% bias, whereas a couple of years back we were just the reverse. We were 35% radial and 65% bias. That itself should help us in improving our market presence as we go forward.
All right, Mr. Singhania, thanks a lot for your time today. That's JK Tyre. Stock is up 10%.